Hey everybody, Boris Lasser from BK Forex. Welcome to our NFP preview of key technical levels for Forex daily technicals for 8/2/13. As always, trading foreign exchange and margin carries a high level of risk, may not be suitable for all investors. We ask you to read this disclaimer very carefully to understand all the risks associated with trading in Forex on margin and to seek advice from an independent financial advisor if you have any doubts. Well, the calendar tomorrow really pretty much centers on only one thing. I'm just trying to pull up the calendar, just bear with me. Here's the calendar. It really centers on only one thing, which is the U.S. NFPs. We do have one key report in Asia in Australia. If we go back to yesterday, which is the PPI number in Australia. That's a very important number for Australia, simply because if this number is cool, it may basically compress some of the expectations for an RBA rate cut. The market is so geared toward the idea that the RBA is going to cut rates next week that the Aussie has been under immense amount of pressure. So if this number comes in and it looks like it's really, if it's really hot, like in other words, if PPI comes in greater than 0.5, maybe even 0.7, 0.8, that may temper some of those expectations, and that could give Aussie a mild boost in the near term. But really, once the Australian data comes out, the only thing that's a really important the market, there's going to be a small look at the Spanish unemployment changes to see if Spanish data is improving. But aside from that, it's all going to be on the non-farm payrolls. That's really going to be the big number. Of course, everybody's looking for about 184. Really, the range here is 150 and lower, pretty much a negative print, 125, a really negative print to the US dollar. 200 or higher is positive. The market is very primed for this kind of a 175, 200 print. That's the sweet spot it's looking at. And then aside from that, everything else is going to be secondary. Personal income, personal spending might be of help. In other words, if you get strong NFPs and an increase in personal income and personal spending, that would really suggest that the U.S. economy is starting to accelerate, and that's certainly going to help the dollar as we go forward. So these two events is pretty much everything that the market focuses on. That's why it's really important to look at the key levels in FX. When you're looking at the euro right now, the thing I think that really jumps out at you is technically that we're actually setting up for a lower high here. This is a very negative construct. So basically, you have a failed high here, lower high here, obviously on a longer term basis. But here, the 33 failed. Today, of course, ECB kind of turned dovish. We had a move that broke all the way down to the 32s. And if you have a situation where you have U.S. data as strong as the market expects, or perhaps even stronger, it really calls for a further move down in the euro, an unwind of this whole rally, back up down to 31, perhaps even all the way out to 30, as the whole market expectation between the tightening U.S. policy and the more accommodative ECB policy creates a massive readjustment. And basically, this whole rally, which was a result of the Fed kind of saying, no, we're not going to taper, we're going to hold off, is getting completely readjusted. It essentially fails at this level. Now, the number turns very negative tomorrow. Taper concerns come off the table. The Fed remains accommodative perhaps for much longer. We could have a re-rally. But given the fact that we failed here, this becomes a really critical level. This 33.50 level becomes crucial. You really have to take this out and then have to challenge the 34s in order for the euro to look like a strong buy. For now, the path of least resistance is to the downside. Euro looks like it's a sell rather than a buy, especially with this very negative price action here today. And it suggests that if we can get further momentum to the downside, this whole move can get unwound relatively quickly. So certainly worth watching. Now the flip side to this is the yen, which has recovered significantly as a result of the bullish U.S. data today. We're 99.50 today. We cleared that level. We're obviously going to be, I think, gearing towards the 100. And then it becomes a really interesting battle, because 100 was a very, very serious congestion level. There's basically two levels here that are critical for yen to really pick up its pace. One is the 150 level, which is where you have a lot of congestion, so you have to clear that. The second is the 101.50. If you can clear both of those levels, perhaps over the next several days, then it puts the yen very much on a path towards testing the yearly highs of 103.50. It puts the whole bid back into the dollar, the whole notion that U.S. rates are going to go up. The rally in dollar yen kind of resumes after all of this indecision and contraction based upon hesitation that the Fed is not going to taper. If you have negative numbers tomorrow, then we're right back to the 98s. We're right back to testing this level, and there's more indecision, and perhaps given the fact that there's more indecision and less clarity in the market from a longer point of view, it looks like we could distribute perhaps all the way out to 96s as the market awaits much cleaner reaction from the data set as we go forward. So very, very interesting setup in both currencies, certainly creating a lot of interesting potential longer-term trades. Cable is unwinding even steeper than the euro is, largely on the expectation that Mark Carney is a dove in sheep's clothing, or a wolf in sheep's clothing, whatever is the term that I'm trying to use, a dove in hawk's clothing, in a sense that next week there's a speech by him, there's the inflation report from the BOE, and there's this sneaking suspicion, despite the fact that UK data is actually quite good, that they may continue to expand the QE program and perhaps expand the accommodation from the central bank in order to goose up the economy. And that is why cable kind of failed out, is looking much weaker than the euro is. For cable, 50 becomes the key support level, and of course the 48 is the major double bottom support level. This has been a long-term support for cable. So if you have a perception in the marketplace that UK monetary policy is going to remain very dovish, you could have a potential all the way to a test of 148 next week as we go forward. Last but not least is the Aussie, which broke, of course, the 90 level. Definitely looks very, very ugly. But having said this, though, this is a really important thing. Even though we broke 90, even though it looks very, very negative, the supposition in the Aussie here is that the RBA rate cut is pretty much a done deal next Tuesday. If it is not, it really sets us up, I think, for a pretty serious and potential short covering rally. Furthermore, if you look at this on a weekly basis, if we go out, I think we have to go out really significantly higher. Let me just zoom out here. Yes. So here's the level. This is from 2010. This is really almost a 3-year support level. But this low here is 88.50, and that is the low that I think is going to be operating as a support level. There's probably going to be some bids over here trying to see if we can support the Aussie at the 88.50, assuming that we don't have a disastrous type of a situation in the Australian economy where there's such massive slowdown, there's such massive low deflation that the RBA not only is going to cut next Tuesday, but perhaps communicate they're going to cut further, and then you just have a free fall in the currency. So Aussie looks very negative, but setting itself up because it's so grossly oversold for a potential short covering rally. That's why this 88.50 level in the Aussie is going to become very crucial, both as a trade against the US NFPs and later on next week as a trade against the RBA rate cut. And to see where we're standing around those levels as the week develops. So that's how the day sets up. A lot of very, very interesting possibilities as both euro, yen, pound, and Aussie all come into very key levels off of tomorrow's NFP. We'll see you there. This is Boris Schlossberg for BK Forex, wishing you the best of luck and the best of trading. Take care.